Thanks everybody for coming. I'm going to talk to you a little bit about the other yellow metal, if you will, uranium or yellow cake, which is our product. We are in production, but before we get into enCore specifically, I want to tell you a little bit about the market. Those of you that may have missed the last 2 or 3 years in uranium, you have an excellent opportunity now. We've just gone through the very first significant correction in 3 years. It's caused pain, it's caused distress, and that's a classic case of a good correction. So at the same time, fundamentals for the industry just keep getting better and better. There is no answer to the supply-demand imbalance over the course of the next 4 or 5 years, at least through this decade. Demand keeps increasing, production keeps getting pushed off into the future. So with that backdrop, and the fact that most stocks are off 40 to 60% from their highs when spot uranium was 115 earlier this year, and even though spot is down to $80 now, those of us actually selling uranium, we're getting contract prices that are the highest we've seen in decades. So the spot is not necessarily a good indicator. It's just the only publicly available one. So you definitely want to keep track of the term market as well, because things haven't been any better for us, and yet stocks are considerably off their top. So the usual disclaimer. Oh, sorry, went too fast as usual. That's the normal disclaimers. We're 100% focused on in situ recovery in the United States. Why the United States? Well, it's the biggest consumer in the world, and it produces virtually none. Its demand is pushing up right now with current demand close to 50 million pounds a year. Against last year, we produced less than 1 million with the 2 or 3 companies that are in production. You can see by the graph on the right that the U.S. was self-sufficient, actually producing about 45 million pounds in 1980. This was before 2 events. Number one, the megatons to megawatts program decommissioning the nuclear arsenal of the Soviet Union. That trend, unfortunately, has reversed significantly and strongly. Both the U.S. and Russia are adding to their capacities at the same time as we're seeing a huge demand in the peaceful use for energy, which is, of course, what we do. We sell to nuclear utilities. Nonetheless, it shows the U.S. has the capacity and the ability, because uranium is not scarce. It's the technology and the personnel and the permitting to actually deliver it to market. Here again, 100% focused. There are 11 in situ plants in the U.S. enCore owns 3 of them. 2 of them are operational. Third one is mothballed or on standby. It will take some work to bring on. All 3 of ours are in Texas, which is just the most incredibly wonderful state to work in. It and Wyoming have distinct advantages in the U.S. energy market in that they're agreement states. And that means that the Nuclear Regulatory Commission pretty much leaves it to the state to do all the permitting. And the states of Wyoming and Texas are very energy focused, very red states. And to give you an idea, we permitted our first operation there in 20 months, our second one in 17 months. For those of you that live in big cities, which is pretty much everybody, you can't get a parking lot permitted in 20 months, much less a uranium operating plant. So we are really happy to be in Texas, and that's the focus of our first 3-year plan to produce 3 million pounds. We've got the strongest team of in situ experts this side of Kazakhstan. Virtually everyone has 20, 30, 40 years experience, led by our CEO, Paul Goranson, who's built 3 or 4 of these plants. We're very well funded. We've got over 50 million in cash, and our market cap, this is probably, it's gone up a little bit. Today's been a very healthy, robust day in the market. Starting yesterday, we started seeing a bit of a rally coming off the bottom. But 50 million in cash, another 20 roughly in marketable securities, and we've got 200,000 pounds net inventory of yellow cake, plus another 150,000 in process. So multiply that times about $80. So we're in very good shape with no debt. You can see the list of our analysts there. This year we will have cash flow in excess of $30 million. Next year our revenue flow will be in excess of 100 million based on our forecast and our current scale of ramp up. Here you can see the map on the left showing the primary basins for uranium in the U.S. And here again, I call your attention to Wyoming and Texas, and you can see our stars are very much focused in those 2 areas, and for clearly permitting reasons. On the right, you can see our goal and our timelines. The goal is to be a 3 million pound a year run rate in 27. So we'll be there by the end of 26 as a goal. 5 million pounds 2 years later, such that 29 would be the first year of 5 million pound production. That first goal is attainable 100% in Texas with our existing assets, simply ramping them up. And we're well on our way to doing that. Incidentally, our two plants that we've put into production in such short permitting timeline were both put into production within 8 months of one another. So bringing a extraction project online is a difficult thing. Bringing two of them on in 8 months is a real testament to our team. You can see the 5-year plan involves build-out of Dewey Terrace, which straddles the South Dakota-Wyoming line. We did just receive some good news through it's been challenged. We had our NRC permits and our EPA permits. The NRC has been upheld in favor of the government and thus our permits. For some time now, the EPA permit just came back with about 90% of the factors we're looking at in favor. So we look to have that in the state for permitting within the next 12 months, and then build out, as you can see, coming in 26. Gas Hills, purely in Wyoming, it's on track for the same timeline. Both of those will be million-pound-a-year producers, and will require CapEx expenditures of something on the order of 60 to 65 million each to build the plant. Helps if you hit the right button. Here's two pictures of our two plants. The upper right one is Rosita. It has an 800,000 pound a year nameplate capacity. We feel confident we can push 1 million through it. It's been completely refurbished over the last 3 years. Bottom left is Alta Mesa, a much larger plant with a total of 2 million pounds of production, 500,000 coming from remote ion exchange facilities, and 1.5 million coming directly into the plant for processing. Both of these are in operation. We have the Alta Mesa grand opening coming up October 3rd on site with a number of dignitaries, so suspect you'll hear about that when that happens. Here again, South Texas is the place to be. We've had successful operations there. Most people don't think of Texas as a mineral producing area, oil and gas, sure, but it is the third largest, most prolific uranium province in the U.S., and right now it is the leading producer in the U.S., with Wyoming a close second. This will be the first year that the U.S. May nudge over 1 million pounds a year production. We're looking at 450 to 500,000 out of our two combined, and we'll be pushing that projected up to about 1.25 to 1.4 million pounds next year, and then ultimately onto our 3 million pound a year goal. Our biggest single factor, you might ask us, so what is your limiting factor? It's drill rigs. Getting drill rigs is easy. Getting crewed manned drill rigs is very difficult. Simple fact that many of you may have come across is in the U.S. there's been a significant decrease in the number of people wanting to work, and we're having a heck of a time finding people to run drill rigs, but there's a bit of competition for them as well. But so far we've got 12 turning right now, and we want to ramp that up to about 20. This just to give you an idea of our main project, the Alta Mesa. It's 80,000 hectares or 200,000 acres of private mineral lands in Texas. And as you can see, the processing plant's down in the southeast corner of that. Less than 10% of this very large tract has been explored. We've got about 20 million pounds when you combine all the categories and established resources. I'd also point out that typically in ISR you aren't going to see measured resources, you aren't going to see reserves, because quite frankly by the time you drill them out on that close of a definition, you should be in production. Here again, this is the resource statement and another picture of the Alta Mesa. You can see the trunk lines coming in. We're currently producing from the first third of Wellfield 7. We'll be ramping up, essentially doubling our production right there now sometime in the next 30 to 45 days, with a further ramp up scheduled for the very end of the year. And that'll take us to about 2/3 of the capacity of the plant. So that'll be getting us up there in terms of the direct feed. We'll still have that 500,000 pounds for remote ion exchange. This is our first batch of yellow cake being shipped off. Once we ship it to Converdyne in Metropolis, Illinois, then that's where we get paid for it by the end user, which is the utilities. We do have 7 contracts currently. One of those is a spot contract, but it's a take or pay, which is important in times of weakness. Not that we're likely to see any of those anytime soon. The other six are all with nuclear utilities in the U.S., our primary customers. And most of those contracts have been sole sourced. That is, they've not been competitive. They generally have floors at or slightly above the spot price at the time the contracts were signed. As I indicated, the last two have been very, very nice contracts. And the ceilings are typically on the order of 50% higher than that. And they're also escalated each year on inflation. We also, in terms of other assets, we have a very extensive non-core asset package, typically conventional, that is mining as you think of normally, underground mining, open pit. We do have those on the block. They will be vended off. We've been doing that for a number of years already and generated in excess of $30 million to the company out of those non-core assets. We also have Group 11 Technologies, where we're applying in situ technology to other metals. We have a significant holding in that company. And our real key is we own the technical rights to PFN, which is prompt fission neutron. And this may get a little detailed, but I'll make it very quick and painless. When most uranium is discovered, it's through gamma radiation, through gamma probes, typically out of oil and gas was how most of it was originally discovered. Uranium is not a gamma emitter. It's an alpha emitter. Uranium, when it decays, turns into products that are gamma. So bottom line is when you drill a hole and you drop a gamma probe down it, which is very typically what almost everyone does, you don't know exactly how much uranium is there. You know how much was there. And uranium is extremely soluble. It's extremely mobile, and it may very well have moved 100 meters over 30 or 40 years. There are some cases it's actually moved from one property to another property. There have actually been mine sites built on uranium mines that ended up not producing uranium because there was none when they got there. PFN, prompt fission neutron, is a direct neutron-emitting device that we have the patents on that we purchased that give you an exact real-time instantaneous uranium value in the formation. This really helps us eliminate wasted drill holes. It helps us bring well fields online quicker, cheaper, and a whole lot more certainty in terms of what our expected production is going to be because we know exactly what's there as opposed to what's based on gamma logging. So the summary, we're in production. The production's ramping up. We're in a very healthy cash position. We are moving forward with exploration at our key projects, that is Alta Mesa and also up in South Dakota, Wyoming, as we try and connect those two deposits, Dewey Burdock and Dewey Terrace. Obviously, you know the big pitch for clean energy, and it's real, and it's green, and it's the nuclear is here to stay. I often equate this to being given the opportunity to invest in the oil and gas industry in the 1950s. Yeah, there are going to be some bad quarters. There may even be a losing year here and there, but for the long-term investor, there's nothing better out there. You're going to have decades of opportunity here. With that, I'd take a question if we have time.
We have 1 minute for a question.
Yes, sir.
Yeah, the prompt fission technology, is that proprietary?
It is proprietary. There are a few people that have units, and the Russians have a similar technology out. They aren't sharing it with anybody, though. There are also lots of geopolitical considerations causing a further contraction in this, or in the imbalance of supply and demand that have to do with Kazakhstan and shipping through Russia.
Okay, well, thank you very much. I think we've...
Thank you.
Thanks, everyone. Thanks, Bill.